One of the things I love about this channel is not only do we have all the great contributions from millionaires and business owners, but we also are sharing information. Jonathan and Dustin sent over an article from Adam Research, I believe, talking about foreclosures and defaults. And thank you for that. I appreciate it. It was a great read. I shared it on the Daily Financial News. But I would love to talk to you guys about what these defaults might mean for conventional lending and also the non-QM space. So what did you guys take from the article? Your purview is a little bit different than mine, given you guys are focused on lending. What do you guys see?
Yeah, well, I think when you're talking about the default rates, it's important to understand the timeline that it does still take for somebody that files a foreclosure and from the time that it actually goes through. I think it was I think the average
1,212 days.
4 years, right?
Yeah,
So we won't
great.
see that like in terms of translate over to our end for 4 years, right? If
Yeah.
somebody files a foreclosure today, that may not happen for 4 years. Now, the trickle down effect is that 4 year period, but how it affects lending is going to be different on the conventional side versus the non-QM side, not
Okay.
only for the people that are trying to buy a foreclosed property, but people that have foreclosures in their name trying to buy their next
Mm,
property after they foreclosed. And it goes into what I'll let John take it from here, but the seasoning requirements from some sort of foreclosure in your past, or even buying a foreclosed property like unconventional, very difficult, non-QM, very easy.
Yeah, so I mean, non-QM wise, to buy a foreclosed property, it's like if you are in foreclosure, I think waiting period sometimes is day after. Some lenders are day after, some lenders are 2 years. Conventional obviously is like four years minimum, right?
yeah.
But kind of I think the biggest thing for foreclosures wise, on the conventional side, it won't matter as much as defaults go up. Because they'll continue to buy homes and cycle them. But on the non-QM side, defaults do matter a huge ton because that's heavily tracked by Wall Street, right?
Mm,
So, because it defines how well these assets are performing, right? Because all these packages are traded on Wall Street, and defaults
right.
mean that payments aren't happening, which means that the return on investment that they've made purchasing these packages are no longer,
Interesting.
profitable. So
Yeah.
what we've seen happen in the past and what we expect might happen, and this is a word of caution to a lot of clients that are kind of expecting DSCR and non-QM loans to remain the same no matter what in whatever market, right? And we've talked about this multiple times, and we always remind our clients like DSCR loans 2.5 years ago didn't exist. So
Right.
if all of a sudden it hasn't been tested through a recession, hasn't been tested through a numerous amount of defaults and a high default percentage, you're looking at a market now where if that happens, right, the first thing that's going to turn off is these riskier type loans like
Yeah.
DSCR loans and other non-QM loans, where if default rates go up, then there's no longer profit within that package. So there's no guarantee that you'd be able to get that type of loan in the future, right? So we've been
Yeah.
telling our clients, like, if you like it and that's how you need to qualify, then you have to do that now versus later
Yes.
because there's no guarantee it'll be around, right? So
Yeah.
that's kind of been our focus overall in terms of like reminding clients that defaults, may come up. We don't know what's going to happen. The economy shows strength, but in reality, looking around, it's not that strong.
Right.
Yeah.
Yeah. And again, just to kind of tie this all together with all the other conversations we have on this channel, I believe, and you guys have the data, so tell me if I'm wrong. A lot of folks were getting into the short-term rental game with DSCR loans. And I think it's fair to say that if you got into that game in the last year or so, you probably bought at the peak. And, you know, while some people are still performing, not everybody is. So it's possible that those loans go bad at a higher rate and thus impact the whole structure of lending. Is that fair?
Yeah, absolutely. I mean, just in terms of the way that it was underwritten, right? Like you were using, let's just say for the most popular, I'd say short-term rental estimate rent, website AirDNA, right?
Mhm.
You would use AirDNA to calculate your DSCR. Now, AirDNA is normally going to give you an occupancy rate that fits in that market, right? But that occupancy rate a year ago is a lot different than the occupancy rate today. And the
Right.
reason the clients, like, even though they got a short-term rental loan going DSCR. They had to go short-term rental because that was the only way they could qualify.
Yeah,
So if they have to flip it to a long-term rental, it's done. Or else they would have qualified as a long-term rental because pricing's better on a long-term rental. And sadly, I have a really good client that we've done a lot of deals for that got a short-term rental about a year ago, and he's selling now because he just can't, make ends meet on it. So
yeah.
we're seeing.
Yeah, it's going to be very interesting. I think the last couple of years, there's a lot of people that were chasing money and easy profits. Again, some of that, there'll be some pain. I think the next 2 years is going to be all about the good operators, right? If you're running in hospitality business, which Airbnb is, and you're doing okay, that's awesome. But you got to realize that you had a lot of dumb money come in, and can they survive flipping it to long term? They're probably having an alligator or negative cash flow. Maybe they can hold if they have a good job, but there's going to be some pain coming, I think, and it'll be very interesting to watch default rates because you could see DRCR loans evaporate, overnight seemingly if it got bad. Is that fair?
Absolutely.
Yeah. Well, somebody wanted to get something started with you guys. How are they reaching out?
Go to convoyhomeloans.com and let us know you came from ORAT.
Folks, if you tell them you came from ORAT, you get one of these two fine gentlemen. If you don't, I can't promise who you get, but it won't be one of these two guys. Thank you.